So, good morning, everyone. Welcome to this class. This is Mark De La Paz from FX Instructor, and we will be discussing the issues to watch out for the upcoming ECB meeting. Let me just talk some background here. Going to today, where I had to seriously think about what the ECB has been doing, I actually thought that the probability of a rate cut from the ECB was very, very low. After all, they've already done their own easing before. They've just introduced $1.3 trillion, a trillion euros of money through LTRO last December and March. But I was reviewing economic data earlier, and I realized that since the last meeting, since last month, we actually haven't seen a good number out of the Eurozone. And yesterday, I think the poor unemployment, the poor jobs numbers that we saw out of Germany basically puts a nail into the coffin as far as what to expect or what is happening in the Eurozone. So 2 months ago, 3 months ago, the ECB President Mario Draghi was a bit optimistic. The projections of the ECB then was that the economy is beginning to stabilize. In fact, your manufacturing PMI ticked up a bit. It was still in contraction territory. It was still below 50. But about 2 months back, the number did come up slightly better. But that's all over now. The latest manufacturing PMI data that we saw throughout the region indicated weakness. In the case of Italy, a sharp drop in manufacturing PMI. And guys, I know we're talking ECB here, but just to underscore the problems for us, I would point out that the Swiss PMI number also disappointed. Yesterday, Swiss PMI number was expected at 51.6. We got it at 46.9. Almost a full 5-point difference between actual and consensus. It is rare for forecasters to be wrong. And you have to think about this. If Switzerland, that has been defending its currency, sees a problem like this, how much more is the issue bad for the Eurozone? Okay, how much more is the issue bad for its neighbors? So the way we're looking at it now is the Mario Draghi may not want to move the interest rates. He may not want to do more quantitative easing, but his hands are getting forced by the developments that we have seen from the economy. Now, let's talk schedule a bit. Let's talk about the schedule a bit. Later in the month, we will be seeing the latest forecast from the ECB. So, because of this, I do not think that a rate cut will happen today. Many are demanding a rate cut, but a rate cut today would be a big surprise for me. Okay, the more likely, the more prudent course of action for the ECB is to wait for its economics team, to wait for its researchers to come out with their latest forecast on where the economy is going before they actually say, let's do something, before they actually say, let's cut interest rates. Okay? There are calls for a rate cut right now. We think that the prudent course of action for the ECB is to wait for its own economic team's projection before moving. That said, how about the idea of printing money? Will we hear about another LTRO? Let's put it from this perspective. LTRO last December was big enough that it was supposed to be enough to handle all the refinancing needs of the Eurozone debt. Okay, the different countries which needed to pay their bonds and needed to issue new bonds in order for their governments to continue running. Those demands have been met already with the size of the LTRO that was introduced last December. The March LTRO was basically for good measure. So what I'm saying is, there's really no immediate need for printing money right now. Besides, printing money has proven to be ineffective. Okay? I don't know if you guys like watching TV. I like watching HBO from time to time. And I don't know if it was last week or a week ago, I was watching HBO. And I saw this movie about Too Big to Fail. And if you watch the last part of that, the Too Big to Fail movie from HBO, one of the lines there was mentioned by Bernanke when he was talking with the character for Hank Paulson. Bernanke said that they are going to lend it, aren't they? So he was basically asking Hank Paulson that, you know what, we've given the banks, we've forced the U.S. banks to take this money from the government, and we told them to lend it. They're supposed to lend it. And any one of you guys who's in the room has been around over the last 2 years, and any one of you guys would know that the answer to Ben Bernanke's question in that movie, or to the character of Ben Bernanke, was no, the banks did not lend the money, did not give it to businesses. Instead, the banks use it to pay bonuses. The banks use it to do whatever stuff, to trade financial instruments, but they did not use that money. So why am I talking about this? I'm talking about this because this is one of the issues that's confronting another LTRO. If the ECB adapts another LTRO, will the money actually be lent out? Will the money be used will it be given to new businesses, to a struggling small enterprise? And the answer to the question is most likely not. Okay? The banks can always get a riskless, quote unquote, instrument out there, and they'll just invest it. If not invest it in European bonds, they might what they might do is use this fresh capital from LTRO to beef up their books, and whatever cash that they were actually holding on before, they will use to buy overseas or to speculate in the markets. So the call now is, let's do away with LTRO. We know that the financial system is already awash with cash, but the banks are still not lending. So the next step really is cut your interest rates. But as we mentioned, it is unlikely that a rate cut will happen today, primarily because the the ECB will be releasing or will be seeing its latest economic forecast at the end of the month. So their move would be, let's look at our forecast first, and then maybe in the next month, in June, we can potentially get a rate cut. So going to today's meeting, we don't think that a rate cut will happen. A rate cut would be a big surprise, and a rate cut would have us thinking, let's dump all the Euro pairs. Now, the important thing to watch out for if we don't get a rate cut would be what will happen in the press conference. And in that press conference, we want to hear definitively that that Mario Draghi, the governing council, really is seriously looking into the latest economic forecast to base their future decision. An emphasis on the need to look at the forecast will tell us that the latest data has them concerned and that they're actually seriously considering rate cuts, which could come in as early as June. To the market, that is enough to argue, let's dump the currency. Remember, financial markets move on news, move on rumor. And the possibility that something will be done is enough to trigger weakness for our euro if we can clearly hear or we can clearly glean from the discussions in the press conference that such an eventuality is likely to happen. So again, we don't expect rate cuts, at least not this month. We don't expect quantitative easing anymore. It has been proven ineffective, and besides, the Eurozone, at least the banking system, is awash with cash. It's just a question of where is that cash going, and that cash is not going to where it should be. It's not being used to help businesses out. Rather, it's just getting traded. So that's what we're expecting as far as, or that's what we need to hear if you're one of those Euro bears like me. Okay, I admit, I am a Euro bear. Now, what are the other issues that we have to consider? In the speeches of Mario Draghi lately, he's been a little bit concerned about what's been going on in the economy. He's been talking about the need for growth. Incidentally, we've just had, or we have an election, a runoff election in France this when's the 6th? I think the 6th is this Saturday. On Saturday. So this will also be an issue. The leading candidate in France, Mr. Hollande, has been talking about the need for growth. And it seems to me that lately Mario Draghi has also been talking more about the need for growth rather than just keep on with austerity. Even Angela Merkel has caught the growth bug, although the German version of growth is more on let us do structural reforms, let us provide the necessary environment for businesses to come in, for growth to happen. Whereas Mr. Hollande's idea of growth seems to be, can we do something? Can government initiate a program that would create jobs, that would grow the economy? So Mr. Hollande's approach is more of a command economy. And what I would like to hear from Mario Draghi later would be, will he be going along the lines of Mr. Hollande, or will he be going along the lines of Angela Merkel? Forget about Sarkozy. Sarkozy is likely to lose the election. So Sarkozy's approach of towing the line of Merkel is not an issue for us. If we hear that, if we hear Mario Draghi talk about going the way Mr. Hollande's way of doing things or policies is, it will be an option for him. It's more to his liking. then that would be one more hint that a rate cut would probably be the next step of the ECB, just not today. What will happen to JPY? You know what? There's a lot of issues that's driving yen right now. Earlier, someone told me that the S&P was, I really haven't read this report yet. Someone told me that S&P was thinking about cutting the credit rating of Japan. Although again, a rate cut for a ratings downgrade for Japan would not be an issue. But let's put it this way: if you have an easing, if there's a surprise rate cut by the Eurozone, I won't look at dollar yen itself, but I would look at your EUR JPY. A rate cut by the Eurozone should reduce further the already slim rate premium that the Eurozone has over the yen. And I would look at it as an excuse for potential weakness in EUR JPY. For dollar yen itself, maybe your dollar yen gets dragged lower by a sell-off in euro yen. But I would point this out. If, say, we get a surprise rate cut, then your euro would be down, your Japanese yen would also strengthen against the dollar, that you just might see your dollar yen going nowhere. So I don't want to touch dollar yen on a rate move, on a surprise rate move by the ECB. In fact, guys, I would rather look at some of the more exotic currencies. I'm thinking, can we go Euro CAD on a rate cut? Remember, despite the bad data that we have from Canada lately, people are still talking about the Canadians disengaging, the Canadians withdrawing their own stimulus program. And if the Canadians do this, this creates us an imbalance for us. On the one hand, the Eurozone is now seen as doing more easing, doing more liquidity, while the Canadians are starting to look hawkish. And that might actually make your EuroCAD to be a good trade. So let me start with EuroCAD. You know, I just realized that I'd like to look at EuroCAD. I was supposed to start with Euro. But let me start by taking a look at EuroCAD instead, because of this potential for diverging policies. Is it already being reflected in the charts, or is it something that we could still play with? So where is my EuroCAD chart? There we go. It's been a while since I've looked at this. Well, it looks to me like we've been stuck in a congestion in EuroCAD. And it also looks to me like someone has already taken advantage of this potential diverging policies between the ECB and the Bank of Canada. We've been stuck in a congestion throughout the month in EuroCAD, and yet we now have EuroCAD below a strong support, your 29.50. Say we get a surprise. FX cash, yeah, we'll move into EURUSD next. Say we get a surprise rate cut in EuroCAD. We already have a big move today, but a surprise cut in by the ECB will have me thinking, can we test that low at 29.40, previous swing low? Can we break it? In fact, I would expect that we will be able to push through that price point if we have a bad read, if we have a rate cut by the ECB. We don't expect a rate cut. A rate cut will have me thinking, let's see this pair break lower. Unfortunately for me, I look at this and it seems to me that we're not really talking about uncharted price levels. In fact, it doesn't seem to me that there is a lot of room to maneuver here in terms of policy changes. This has been reflected already. I'm just holding on to Dan, I'm assuming you're talking about our GJ short earlier. I'm holding on to it. Stop loss is at break even. Yeah. I have my stop loss at break even now, at least one tip break even. But beyond that, not doing anything else. So I'm assuming you got in at 30.10. I got a bit impatient. I got in at 03. Okay, so guys, I was hoping that we will get something nice in EuroCAD, but I don't see anything nice. Although we have a daily breakout, I don't think that this is the start of another big cycle. We've had one big cyclical move already, and I don't expect to see any big cyclical move at the moment in EuroCAD. I was hoping, but it's not there. So let's just go to Euro and see what we can do. Yeah, I couldn't do a limit sell. I had a 10 pip requirement for limit sells. Anyway, let's go Euro, guys. First thing that I'd like to point out about our Euro chart is when you look at the very big picture, you have a descending triangle in our EUR/USD. So from a technical perspective, we already had a bit of a bearish bias. Now this is a weekly chart. We got rejected from that hypotenuse yesterday, Wednesday. All right, what else do we have here? Well, I look at the dailies, and we've had very little price action so far for the day. So if there is a surprise rate cut, I would expect a break of our immediate floor at 31.22, a quick run for 30.42. Now, a potential thing to do here would be to just use a sell stop, just in case there's a rate cut, a break of 31.22. So maybe you could place a sell stop at something like 31.20, okay, in anticipation of a sell-off if there is a surprise rate cut. If there's no rate cut, then the best thing to do is to go neutral. So immediately remove whatever sell stop that you might place. And then you'll have to wait for the press conference to figure out what the ECB is thinking. So we have a bearish bias on the weekly scale. We said that we are inside this big symmetric the big descending triangle. Also, we are around the 2/3 point of this big descending triangle, meaning if there is going to be a bearish breakout, it should happen this week, if not next week. Otherwise, we break only when we are near the tip of the descending triangle, beyond the 2/3 mark. You are likely to see a false breakout instead of a sustained bearish move. So we need this bearish breakout to happen this week or next week. What else do we have in our chart, guys? Indicator-wise, you have a confluence of bears. You have your rejection from the hypotenuse. And again, there's a lot of room to maneuver given that we haven't moved much today. Your average daily range in EUR/USD is about 87 pips. And for today, how much of that do we have? We've got highs for the day at 31.63. Lows at 31.23. So we've only had 40 pips of price action. We could easily double any breakout. If it's accompanied by an actual rate cut, I would say forget double the range, forget double today's candle size. Go for 30.42, your key support level. Why do I say that this is a key support? Because although I have my triangle breakout at 29.98, 30.42 has been a strong support for us for some time. We've had daily lows around this price point. Okay, so Euro, we have a bearish outlook from the big picture, dailies, weeklies. You go intraday and you're seeing a mixed set of signals for now from the 4-hour chart. But even here, MACD is down, which suggests you look for a bear cross in your stochastic. Hourlies, you're about to get a bear cross in your MACD. All we really need is a push below 31.22. And to do that, we either would want to see a sell-off in the stock market, or you'd want to hear a surprise rate cut, or you'd want to hear Mario Draghi talking about the need for policymakers from the fiscal side to also engender growth. Now, if he talks about another LTRO program, then that's fine. LTRO is still printing money. That's still something that would weaken the currency. But LTRO is the wrong move for the ECB at this point. They have done enough LTRO. They have printed a lot of money. And yet that money doesn't seem to be flowing to the rest of the economy. It seems to be in the books of the banks. Okay, so we are about 3 minutes away from our release, guys. So let me just take a quick run through with our Euro Pound and our Euro Yen. EUR GBP has been trending lower. In fact, we are approaching price levels that we haven't seen since 2008. If we see our, if we have Euro Pound pushing below 80.66, then we'll be talking about Euro Pound pushing to levels that we haven't seen since 2008. Why am I suddenly pointing this out? Let me just say that we are actually seeing real money flows from the rest of the Eurozone to the UK. It's that real money flow that has been responsible for the sustained sell-off that we've gotten in Euro Pound for the last month. And any talk about rate cuts, talk about trying to engender growth in the economy, which is another code phrase for let's come up with more liquidity measures, would just weaken the euro going further. And another concern that I have is political. What do you think would happen if once we learn that Hollande really wins in France? We'll have the two biggest economy in the Eurozone with leaders who have different prescriptions on what to do next. So that will just create more uncertainty for the Eurozone, with Merkel having a different idea, with the Germans and the French having different ideas on what to do next. Guys, we're just a few seconds away, so let's wait if we are going to get a big surprise. Again, might be a good idea to do some sell limits just in case we have a big surprise. Excuse me. So we're all just waiting for the update here. And should be out by now. Why am I not seeing it? Thank you, Ram. There we go, 1.0. So, as expected, no rate cuts from the ECB. So the focus really goes on to the meeting. Again, guys, what do we want to hear out of the ECB press conference? During the press conference, you'd like to listen on what Mario Draghi thinks about the growth policy that Hollande is espousing in France. If he talks about trying to engender growth, if he abandons the inflation fighting role of the ECB in favor of trying to grow the economy, doing measures that will grow the economy, that would have a negative impact for the euro. If he talks about let us wait and see what happens with the latest ECB economic forecast, then that's basically another excuse to say, let me get a nice reason that I can present to the Germans for cutting rates this June. So guys, no immediate impact from the markets here, which shifts the onus to the press conference in order to get things going. Guys, any questions about any pair that you'd like us to focus into? So again, I would retain a bearish bias. Okay, let me take a look at that euro chart again. I would retain a bearish bias in our euro. Any hint of a potential rate cut this June would see us making a quick run for 30.42. Over the next week or two, I'm hoping this week, we would like to trigger this descending triangle in our weekly charts, daily chart. We have this window this week and next week to get this breakout of that descending triangle going. Aussie and then cable. Okay, let's take a look at Aussie. Well, since we saw the rate cut from Australia, I've been bearish in Aussie. One of the things that we'd like to see in Aussie is a test of our 102.25 support level. That's the previous swing low in Aussie. Test that, we'll be happy. Push below it, we'll be even happier. What is the likelihood of such an event happening? We had our rate cut. It was 50 BPS. With the RBA willing to cut rates some more if necessary. What else do we have that's driving us, or that could drive us lower? Latest economic numbers have been disappointing. ADP employment change data yesterday was a lot short of the consensus forecast. So that tells me that let's put it from this perspective. If people do not have jobs, they don't get to buy new cars. No new car, then less exports of raw materials by the Australians, by commodity producers. So you expect the currency to weaken. Technically, you have a rejection from 38.2 Fib retracement of your sell-off from February 29. You have a new set of sell signals from your daily indicators. For our charts, you have a bearish bias. Hourly charts, for now, you're looking bullish in your stochastic, you're flat in MACD. You've actually bottomed out in MACD. So to me, this is a question of pricing. If I can get Aussie at, say, just below this resistance level at 103.05, I may be interested in taking the sell side. Although right now, my candlesticks are telling me that I have a 3 inside up pattern. This is actually a high level bullish reversal pattern that the risk, it seems to be, for now, the risk seems to be if you get a close above 103.05, you might actually bounce first. Sorry, I am bearish overall, but we're developing a bullish reversal signal in our hourly candles. So you get a close above 103.05, you might actually see Aussie rally first. I get 103.58, I will look for selling from there. But I don't want to go against a 3 inside up pattern. That's typically a high level, a highly reliable setup. So immediate risk is for a break higher, at the very least a test of 103.05. So for now, I will look at selling only from 103.58. Or maybe if we can invalidate this setup by coming up with bearish patterns over the next few hours. But as of the moment, then the more immediate risk is for a rally to develop. Cable. Well, the problem for GU as I see it is we have Euro Pound rallying. I am actually bearish in GU. I look at this and I tell myself we have an ongoing mean reversion. Typically, once mean reversion gets started, okay? What's mean reversion, by the way? Mean reversion is when you have your price charts, when you have prices when you have a big excursion between the exponential moving average and the price chart. Typically, I would use the 21-day EMA for this. So when you have prices far from your 21-day EMA, there's a tendency for it to pull back in, and that's mean reversion. Normally, once mean reversion gets started, it continues until such point where prices and the EMA line touches each other, or at the very least gets very close to the same levels. So right now, I'm looking at this and I'm telling myself mean reversion has started. It's been going on since Monday, and it's likely to continue until it hits the 21-day EMA. That said, it is possible that instead of prices dropping, your EMA actually adjusts faster. Your EMA moves up as well. So I'm not automatically shorting it. It has to be from a good price. It has to be from below resistances or a break of some form of support. Let us see what we have intraday. So dailies, we have a bearish bias. Intraday, what are we getting? From the 4-hour picture, we have a confluence of bears. We're actually below 23.6 with retracement of our latest up leg in GU. From the hourly level, we have a flat market, indecisive trading, although the charts are bearish overall. So for me, we're not in a good position to sell. Maybe if I can get prices from under 62.06, I'd be a willing seller. Or you give me a close below 61.63, and I will be a willing seller. The immediate risk, though, is for prices to ease off. The 21-day EMA is actually close now. It's at 6,100. So we're only about 76 pips away. So what does that mean? Wait for prices to get closer, and then we may be able to buy coming from the EMA line. So we're not suggesting buy side now. We'll wait for those EMAs before turning bullish on this chart. Vishal, you're looking to go long after the break, retest at 60 to 37. Well, one argument for sustained or for a rally in GU, or for at least GU to hold its ground, has been your cross. And as long as things are bad in the Eurozone, as long as your Euro pound trends lower, that move lower in Euro pound will have an impact in GU. We can't predict how strong of a push up or push down it may have, but it has an impact in your GBP USD. So that could be an argument for why you would want to do a buy on dips. The fact that your Euro pound keeps on dropping and dropping and dropping. Alrighty, let me get back to overview. So any questions at this point, guys? Again, we had an as expected decision from the ECB, but this is a pivotal meeting for the ECB. This is a very important meeting from the ECB. We will likely get a change in the policy thinking. Even saying that they are waiting for the next set of economic forecasts would have a negative impact for us as far as the euro is concerned, because waiting for the next economic forecast, trying to look at what they're telling, essentially means that they are already thinking about cutting interest rates in June. Yeah, well, I had a lot of that situation last week and this week, Vishal, to focus on something that forgot to do something elsewhere. Currency value is already priced for expected future inflation. Well, Suleiman, at this point, it's not reflective of any change in policy. Meaning, if we get a hint of a rate cut, then we should expect that things will go down. As far as future inflation is concerned, I don't think so. At this point, market really hasn't been that responsive. Guys, it looks like we've run out of time. Thanks for joining this class, and good luck with the press conference.